Yes,
All right.
sir.
So today we'll just kind of go over the liquidity again and see the different types of liquidity. And
Okay.
so you remember when we spoke about how the market moves in two different ways regarding liquidity? And do you remember what those two ways were?
The where one is displacement and the one is rebalancing. It was
Yeah,
something
100%.
like that.
But that's like how the market moves. I meant how does markets okay, so I'll just kind of tell you, right?
Okay. All
So
right.
market does two things. It
Okay.
builds liquidity and it takes liquidity. That's the only two things that markets can do regarding liquidity. And so when you can
Right.
understand that, you can kind of anticipate where liquidity might get built within the market, and then where we can take the liquidity based off where you're at and where you can anticipate to go. And so liquidity just the definition of liquidity refers to a pool of buy and sell orders that institutions and retail traders take place at key price levels. So you know every swing highs and lows contain liquidity, right? Previous session highs and lows, previous daily highs and lows, and so these are gonna be your daily liquidity levels that you're gonna mark out every each and every day to see if we're gonna have a reaction off the sweep, or if we're gonna create a swing off the sweep. And so smart money manipulates price to grab liquidity before making the real move. And so when you can understand that, you can just anticipate, okay, if we ranged yesterday, then more than likely we may come up or down to take out yesterday's range and then go into the real direction. And so buy side liquidity refers to candles high, stops from traders shorting the markets, and it's placed above key level highs. So when a
Right.
price moves up, it takes out these stops, failing institutional sell orders. So an example might be a rally above equal highs, triggers buy stops, and then price reverses bearish
What
just to
happened
sweep liquidity.
in
Yeah,
the
yeah,
last week?
exactly.
Yeah.
Like
Yeah.
literally last Friday, you saw it,
Yeah.
play by play. We had those two equal highs based off previous weekly range, and then Friday FOMC happened. We swept all those highs, and then what happens after? We just dumped straight off the bat.
You know,
And so,
I have this specific way of understanding things. Sometimes that's something I really don't understand, and then in the next sentence it becomes very clear. So what you just said,
mhm,
it helped a lot. So the
okay,
liquidity would sit in highs and lows of whatever, or is it daily or whatever range we are looking. So
mhm,
now it's a little bit clearer,
yeah,
the way it's being built. So I
awesome,
kind of understand it much better now when you explain
awesome,
like, okay,
yeah, man. I'm just breaking it down step by step so that
great,
you can
great,
understand.
great.
Yep. Are you writing this down?
I wrote down liquidity, and then I put number one, building liquidity, and then number
Mhm.
two, sweeping the liquidity, and then
Yep.
I'm gonna just add uh uh, uh found on highs and lows.
Yep. Exactly.
Yeah, and then let's say that we are looking into a daily, that will be in a daily, but let's say we are consolidating and we are watching on 4 hour, that consolidation. So we would mark out the range of that 4 hour high and low, and
Yep.
that would also be liquidity there.
Exactly.
Okay, yeah,
And
it's
you can
much
even
clearer
go
now.
down to 1 hour too.
Right,
See See
Right.
the one
Well,
hour
whichever range
liquidity.
we are looking at, that's where the that's on the highs and lows of that is where
Yeah,
most likely is gonna sit. Okay,
hundred
great,
percent.
great.
Awesome.
You know what confused me last time because we just opened the chart and we start marking liquidities, and then I didn't understand. Okay,
Yeah,
great. It's on highs and lows, but of what? I
yeah,
that's what I did. So now it's a little clearer. Same like order block. Once you told me there has to be a change in delivery of state, it just
yeah,
became clear. So
yeah,
great,
100%.
great.
It yeah, this is a mental exercise. The more you see, the better you'll spot. And
Yes, sir.
so yeah, man. Do you have any questions on this page, by the way?
No, no, because when I connect the dots, it becomes clear because now I know what I'm looking for. So before
Yeah,
I look for the liquidity now, I would first mark the highs and lows and then see the liquidity. Is that correct
gotcha.
way?
Yeah, 100%.
That's it. That's it. Now I understand the concept. Great.
Awesome. So, where does liquidity exist? Liquidity is typically found at obvious retracement levels, such as equal highs and lows, trendline liquidity, session highs and lows, Asia, London, New York, um, and previous
Trend.
daily highs and lows.
What is this trend line liquidity?
Trendline liquidity is this. This is trendline liquidity.
Ah, that's why you guys would connect those. Okay. Okay,
Yeah.
okay. I didn't
So
understand before.
if we're targeting this as liquidity, then obviously we want to go up to take out all these highs, right?
And which high would we target there? The last high, the first one?
Realistically, you can target this high, this high, this high, but this would be the ultimate target, right? For the external
Right.
highs. So,
Okay.
let's say we like swept this low and then we have a CIC to the upside. Then we're more
Mhm.
inclined to go up to this high,
Right.
take this high out and then potentially dump again, right?
Right.
And
Right.
so,
Wanna
that's why we have,
what you want
yeah,
to think of it as is like think of it as a low resistance liquidity, because
yeah,
all
Mhm.
that is gonna act like fuel to push up. Like we're heading to grab that liquidity.
yeah. Notice
Right.
how it says a dollar sign right above the dash line on every
Mhm.
liquidity line. It means there's money sitting above these levels. You get what I'm saying?
Mhm.
Or below these levels. And so, like Adrian said, these are low resistance. So you can
And
just
would
anticipate. Yeah.
So price will
would
move
you would
through
you
it
have
like a knife through hot butter.
Yeah, exactly.
okay, so when you say that if it I know you told me in the previous class that that's what's coming, but how do we know is he gonna collect the money and reverse or just push through like you just said?
Well, like for example, this would be like a consolidation rate. Let's say this is like the range for the day, and you're looking at it from like a hourly or like 15-minute time frame, right?
Okay.
Well, if we started the day off by consolidating, and then New York pushes it down and reverses, then those are the targets for the day, because
Got it.
we're grabbing the
Got
targets for the day. So you're only going to be aiming for like two R each day. You know what I
got
mean?
it.
So
Got it.
it's
Got
like a
it.
low hanging fruit. You'll grab it, sure. If you're looking at it from a higher time frame, then you would have to wait and see the reaction at the high. Is it going to start creating a swing to manipulate it and reverse back down, or are we just going to create continuations to continue up after taking that liquidity and maybe seeking a target at a higher spot? You know what I mean?
Right. Yep. Yep. So let's say that New York went down and swept the liquidity. We
Yep.
target the upper, but that means that if New York went through the bottom liquidity, we would wait for the another opportunity. We wouldn't trade off of that,
Yeah,
right?
exactly. Yeah.
Okay, that's what's confused. Okay, good, good, good. All clear. All
Perfect.
clear. And would you, last question, would you consider liquidity as a straight line or a area, which means, let's say,
Straight line.
on the straight line. So
Yeah,
it
yeah, straight line.
shouldn't,
It's
as
easier
soon
to
as it,
think of it as a straight line.
okay, cool.
Yeah,
Got
easier
it.
to think of it as a straight line, but like let's say for example if we're at all-time highs, yeah, you don't
Hmm.
know how far like there's liquidity built up. So like let's say all-time highs, the general public would think, oh, okay, we're gonna reverse from the all-time highs, but that's not the case. All-time highs, you don't know how far we're gonna keep going, so we're gonna keep buying. Usually like you keep buying because you don't know how far the liquidity is. If you're within a range, then you have an idea where the targets are and where you can continue to the next area. You remember when we were looking at Friday and I was like, okay, what's the next point of liquidity? Well, we have like a fair value gap all the way at the other side of the range, right? So
Right.
we can like fill that fair value gap and then reverse. You know what I mean?
Under. Yeah. Yeah.
But you
Yeah.
don't know, we don't know how far it's gonna go and how far it's gonna fill. Then it just comes up to, okay, wait and watch the candles print, and if we start printing a swing, then you know that the characteristic of a swing is changing directions. It's like when you're driving a car and you're doing the you're driving in one lane and you want to go in the opposite lane. Well, you have to do a K turn, yeah, like a 3 point
Yep.
turn. Well, think of the swing point as a 3 point turn of a car, right?
Got it. Got it.
So
Got it. Very
so
cool.
you're going in one lane and now you want to go in the opposite lane. Well, you have to do the turn. So you do the three
Right.
point turn and then you're going in the opposite lane. Same thing with trading. If price is going in one lane, if we're going bullish in one lane and we want to go bearish, we can't just go bearish like out of the blue. We have to create a specific signature in price, which is the swing point. So you do a 3 point turn and then you start shifting the other direction. Well, it's the same concept for the change of state of delivery. That's the point in price where you see the change of state of delivery, where you're changing the delivery state from bullish to bearish or from bearish to bullish. You know what I mean? And that would be in your
Understood.
candle too.
Right.
So
Understood.
so
Yeah.
same idea, right? We come up, we grab liquidity, we wait for the swing point, and then
Right.
we
Right. Right.
enter
Right.
it and we continue in the distribution of that changed state of delivery.
So after I'm gonna add that here actually. So let's say we sweep the liquidity.
Yeah.
Third step, wait for
Confirmation.
CIS
Yeah, exactly.
confirmation.
Which is the change of
Okay.
state. Yeah, CISD, exactly.
Back, guys, just to let you know I'm here.
Yo, what's up, man?
Right.
Hey, welcome.
All right.
But that makes sense, right? What I explained?
But perfect sense because I love when things connect and I understand better when you connect one with another. It gives me an order in which, I should think also.
Yeah.
So this was very good that I understand now after sweeping liquidity, the next confirmation would be change in delivery.
Mm-hmm.
So I know the steps, which is great.
Paul, can you do me a favor? Can you go on Google and just type 3 point turn or K turn?
I think you were sending that in a group somewhere.
Yeah.
Yeah.
Yeah, exactly. So think of it like that, right? Like the lane that you're driving in, like in that picture, for example, when it goes to number one. Like think of that as like think of the first lane that you're in being bullish and then the other lane being bearish. Well, in order for price to change directions and go to bearish, we have to do a 3 point turn. That 3 point turn is considered the swing point.
Understood.
Makes sense, right?
Yep. Yep. Perfect. Yep. And that's good because if we don't see that, there is no trade.
Yeah, then we're not
Simple like
turning.
that.
We're still in the trend. We're
Yeah.
still in the lane, in the bullish lane.
Right. Right. Right.
Are we good here?
Yep.
So, yeah, man. Just back to kind of what types of liquidity there is. You have the equal highs and lows, trend line liquidity, session highs and lows, right? Uh, you know, the whole model of this is off of a session high and low, right? But also that can be counted as daily highs and lows. But realistically, I'm looking at the Asia highs and lows. So we're gonna go over the daily profiles here in a second, but yeah, session highs and lows is really where I'm really uh, actively looking for.
Right.
So
And did it ever happen that you don't that there is no liquidity on session high and lows?
say it one more time.
Would it ever happen that there is no liquidity on session high and lows and it was
That's never gonna
consolidating?
happen because
Good.
Asia session builds the most amount of liquidity out of all three sessions. So we have Asia, London, and New York. That's the order, and Asia builds the most amount of liquidity, and usually London creates low or high of the day, and then New York, usually continues from London or reverses. Um, but we're gonna, like I said, we're gonna get on different daily profiles here in a second. So
Got it.
just have an idea, have an understanding that okay, session highs and lows very strong, and that kind of like matches with daily highs and lows liquidity, and then
Okay.
within uh Asia session range, you'll be able to spot different types of liquidity like equal highs, trend line liquidity, things like that. And so yeah, why do we utilize liquidity? You know, and liquidity has to do with it ties in with the swing, right? Because what is the swing? The swing, we accumulate the low, we sweep the low, right, creating the C2, and then while we're creating the C2, we're also having a CISD to the upside, in a bullish scenario. And then, you know, the first thing we did was to grab liquidity to create the swing, right? And so
Mhm.
that's why we always wait for liquidity sweeps before entering, because if there isn't a sweep, then we're just gonna get caught up in the manipulation, right? And so liquidity grab before the trend moves. Smart money does not chase price; they engineer liquidity grabs
Mhm.
before price makes a major move. Institutions hunt liquidity to fill large positions. Stop hunts and false breakouts. Retail traders enter breakouts, but smart money uses this to trap them. For an example, price breaks above the high, triggers buy side liquidity, institutions sell into it, and then
Mhm.
price dumps.
Price drops.
So this is why we don't use buy stops, and really just stay off of retail trading patterns. And then
Right.
CISD after liquidity sweeps. Once liquidity is grabbed, price and shift structure to the opposite direction. This confirms the smart money has absorbed liquidity and is now moving purposefully. With CISD, right?
Right.
So yeah, here's the different types of liquidity. You know, if you're coming up, the low it creates before it pushed up again is also liquidity, right? So let's say like we come back up here and let's say, oh, since we swept this high, we're coming back down, right? We
Right.
may just come back down to grab this low and then start pushing back up, right?
Right.
And so, just anticipate that to go up, we must first take a low.
Take a look. So let's say that we didn't enter on the previous low. We can wait for the next low to
Yeah,
enter.
exactly.
Okay.
The next low that sweeps the previous low,
Wait.
exactly.
Yeah.
And then if it creates a swing, CISD, all the beautiful stuff we talked about, then you enter,
Right.
Same thing here, price is building liquidity. You can anticipate, you know, price will probably come down and take these lows, right?
Right.
Same thing here. And then here's all the buy side liquidity examples. Pretty much the opposite, right? And
And it's pretty much the same when I look at it.
yeah, it
It's
is.
it's
It's the
just
same
continuing.
type of liquidity.
Right. 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 Okay.
Yep.
And is it the more time would the third example be better than the first one? Would that be stronger liquidity?
They're all same, bro. But
Same.
the more times you see it touch, yeah, it's like building a lot of
Okay.
liquid. There's money there. You know what I mean? So when you see something like this and
Mm-hmm.
like price, let's say like price dumped a little lower, but like now we're like creating a swing down here and then trying to go back up. Yeah,
Mm-hmm.
these would be a great target for you to target on the buys because
Yeah.
Right.
you know that this is like built. You know what I mean? Like how many touches? 1, 2, 3 times. You know what I mean?
Right.
So
But when you
people
say
just
would we wait in the example you just showed? We would wait to sweep the liquidity and then do the sell, not the buy, right?
it's possible. It's possible. Yeah.
It depends on where
We
we are on a higher time frame.
yeah, exactly.
Ah,
It all depends on the context. Because for example,
Yeah.
if you normally, right, let's say higher context were bullish, right? Well, this example that you're looking at the bearish building liquidity at the top there,
mhm.
that would be like, let's say for example the starting point of that line is the daily open at 1800. Well, Asia and London, all it did was build liquidity. New York would be a New York reversal day because we pushed down and then we create a reversal back up. Well, that liquidity from Asia and London become targets. And that's the built up liquidity from Asia and London. You know what I mean?
Um, I'm a little confused. Um, can we, can we sweep liquidity and continue in direction, or liquidity is only swept when we change direction off of it?
Both
Both.
because
Both.
it can
Yeah.
act
That's what
as,
really
yeah,
confused me. Okay,
yeah, it can
okay,
act
okay.
as like as low resist, because there's two types of liquidity, right? There's a low resistance and then there's high resistance. Well, if we just recently swept a low, that recent sweep of the low or high becomes high resistance. So we're not gonna come back up because we've already just swept it. You know what I mean?
Right, right. Okay.
So let's say like right here, all
Mhm.
these examples, you're seeing low resistance liquidity.
Yeah, that's all low resistance.
But let's say like right here for an example, in this in this example, right? Let's say price comes up, takes this high, takes this liquidity, and then dumps. Then the high that takes this high becomes high resistance. Or yeah, right?
Yep, high
Adrian?
resistance. Yeah,
Yeah, high resistance. So this is a protected high. So we're
exactly.
more inclined to go down.
Right. And my question was, let's say it comes back up to that liquidity low resistance, can it, so if it just pushes and continues up,
Yeah.
it's again considered as swept liquidity and pushed up.
Yes.
Yeah,
Okay.
because
Okay,
that,
I
that will
did.
create a swing to go up, right? We swept the low.
He's talking about the
We're
one all the way
closing
to
up.
the right.
Oh, this one?
Yeah.
Yeah, yeah.
That's
So
the one you're talking
still,
about, yes?
I mean, whichever, because I understand what I'm saying, so it doesn't matter which example. All I was asking is when we are going up,
Uh-huh.
let's say now on a bearish, and we come to the liquidity, I didn't know that we can, no, on the bearish one.
Oh yeah.
So yeah, so there we start going up and we come to the liquidity. And my question was, I know that we can sweep it and continue down. That's clear, but
Mhm.
is there like that we come up to that liquidity and then we just continue up? That's
Yeah.
my
It would
question.
be a reversal.
Yeah. So let's say like we swept the previous daily low, or we swept like an important low that's toward the left. Then yeah, we're more inclined to go up. Yeah, exactly.
It would just become a reversal.
Okay, I didn't know. I didn't know. I just first time understood that we can actually just go through the liquidity and kind of take it as a fuel and continue up. And
Yeah,
it's
because
Yeah.
still
think about it over here, right? Look at that pattern. Well, if we come up and sweep that liquidity and keep going up, we just created a change of state. That would become an order block.
Bullish order
and
block to go up.
and would we then wait for the price to tap back in the order
Exactly,
block?
exactly.
But it doesn't
Wouldn't that,
necessarily have to. But yes, it can.
In theory,
Tap back
yeah.
into. Yeah, in theory, yeah.
okay, but you would you enter a trade if we were just get the liquidity and start going up, you would wait for the change of state, a clear change of state, and
Yes.
then possibly.
Yeah, you wait
Okay,
for
good.
confirmations.
Understood. Now it's clear.
Yep.
Okay, great,
Awesome.
great, great.
So no more questions with the speech.
No, no. And then when you mentioned earlier, okay, we came back from bearish example, we
Uh-huh.
come back up, sweep the liquidity, go back down. That's now stronger liquidity built there. So there is still liquidity there. Even though we swept it, we still count it as okay. There's still
Oh, you mean the
liquidity on that
protected
level.
high? You're talking about protected high?
Right, right, right. The
Yeah,
example
there's
you
still
gave.
there's still liquidity, but it's protected now.
Yeah,
What does
since
that mean?
we swept the highs, so
Mhm.
the high that swept the highs becomes strong. It's protected.
While the example all the way to the right, you see how we never swept the high. We just build liquidity up with a trend line.
Okay. Yes.
Well, this is low resistance, and if it sweeps it and keeps going down, it's high resistance because it's harder for price to come back up again. We just swept liquidity.
Okay. So that's all it means.
Yep.
It means that the price is harder to go back up
Exactly,
to that.
exactly.
To just
And
Yeah,
price
exactly.
price will always go to the easier, weaker areas. You know what I mean? Like where there's a lot of liquidity.
understood.
It's not gonna go
Okay.
to the harder. It doesn't. Price doesn't like resistance. It likes things where it's smooth and easy. So it's
Yeah.
gonna keep going to places where there's low resistance in terms of liquidity. So you see like the image bottom right, that's low resistance.
Yeah,
Right.
Because you see
Right,
how
right.
price never took the high?
Right.
It's
Yeah,
all built
I
up.
see.
Every time it comes back up, it's just building more liquidity at the highs. More liquidity, more liquidity. For what purpose? Well, probably because it's going to be a reversal and we're going to target all those liquidities.
Right. Okay. Understood.
yep. So this pretty much talks about what we just talked about, right? Identify the liquidity pools. So find the
You guys
highs and
hear
lows.
me?
Yeah. What's up, Dado?
Yeah, yeah. I was trying to ask you times something, but I see no one is saying so. Okay, so I just wanted to say for the previous
Yeah.
yeah, back. So technically, if I understood good, if there is no build up low resistance, there is no money to be swept. So when once the high point liquidity is swept, that's why it doesn't go back because there is no money build up. So it has to go to
Exactly.
Exactly, yes.
the
Yep.
build up again, little by little
Exactly.
more liquidity, and then
Yep.
it's possibility to get
Yes.
swept again.
Yep.
So that's
Exactly.
why
Yeah.
it's not gonna. Yeah. Okay.
Yeah, it's
100%.
exactly.
Okay.
You understood.
You had a good understanding of liquidity, bro. I remember Dado.
Yeah.
Yeah.
Okay. I've tried to say a few times to jump in a conversation, but to see if did I catch it, but I don't know. My mic just didn't work
Yeah,
for some
exactly.
reason.
Like when you have targets that are low resistance liquidity, you know it's a good day. Like you know it's set up as a good day, bro, because the targets are easy. If you go back on Friday for NQ and you look at the chart, it's all low resistance. So Paul, do you have your chart? You have your charts real quick? Like open up NQ for today. For Friday.
Okay.
NQ Friday. Go on like the hourly or 15-minute. Yeah, so yeah, we swept the previous weekly high. So look at today's session, Friday session specifically. So you see how those lows, there's built up liquidity at the lows. We never sweep it again, like in the middle there at the bottom, Paul. Yeah, those lows have never been swept, and then all that movement upside is all trending up.
Yeah.
So
Yeah, I see.
go on the 5
Huh?
minute. Go on the 5 minute, Paul. Go for Friday.
Oh yeah.
Yeah, so look at 10 p.m. and Friday, and like make sure the screen we can see like both sides of the curve. I mean,
You
like,
said 10 p.m.
yeah, 10 p.m.
Uh,
Well, anyway, like you see the left side, how there's liquidity right there.
Yeah, the three little, but four actually.
Paul, on
Is that the one?
you see on the left side, yeah. See all the trend line liquidity, not there at the bottom. Yeah, all that.
That
Yeah,
okay?
yeah.
Yeah,
Well, by 10 o'clock, see how we push down to the on the right side. Yeah,
right.
exactly. We pushed down all the way because we had all of that liquidity already built up on the previous days. If you zoom out, there's even more liquidity at the bottom. Yeah, on the other side.
all this.
Yeah. So we had
So from the previous days, there is this big drop that has to
yeah.
happen to sweep up.
Yeah, because we actually the target was the previous weekly low. So if you go on the weekly chart, like the target was the previous weekly low. We swept the low of the week, the previous week. So that was the target. So if you put that line there and you go on the like hourly, well,
Yeah.
we swept the internal liquidity of the day, and then we continued all the way down to grab all that liquidity that was built up all week. So you see how we built up the liquidity all week, and then we came up, sweep the previous weekly high, the red line at the top, came down, and then we just dumped on Friday. So all week, this was the profile for the week. The characteristic of the week was build up at the beginning of the week, sweep the high and reverse, and take the low.
So yeah. So we have one build up, we have two build up. So we pretty much took both sides of liquidity now.
And the previous weekly low.
Yeah, and the previous weekly low. So
Where did we take the previous weekly low? On the beginning, right? That's where we
here.
started. Okay, good.
Yeah. Well, we didn't.
And then
Yeah.
Friday we took the low last weekly low.
Friday. Okay.
Friday. You see how big drop was there?
Yeah. So
Like
there
that.
we where yeah. Okay. Okay.
Yeah. So point out where Monday is, Paul.
Yeah, that's why I was just looking now.
Yeah.
Right here.
Yeah. So Monday's right there. Just put a vertical line there.
You are on 1 hour candles, yeah? Yeah, okay.
Yeah,
okay.
1 hour. So that's the start of the week right there. So all that liquidity was built up from the previous week.
The left one. Okay. And then if we came on Monday, we would mark the high, and then we would anticipate to sweep the high, and we can. So would you already on the second sweep? Actually, sorry, first sweep of the Monday, we could already catch that move down
Yeah.
on the left side. On the left, I assume that was
This?
no,
This?
the other. Is that a sweep?
We,
Or no?
we never swept the
No,
high here.
we never swept it.
There is no, you see, it's below the red, Alex. It's still left up liquidity. It's not a new high.
Okay, so
Yeah.
You see
then
how
we would,
this one sweeps the high? This one
Yeah.
never swept the high.
Price is
Yeah.
higher on
So
that
we-
one.
Price is
We
higher
would
on
have-
this one.
so that's the one we are waiting for.
Yep.
That
Yeah,
one.
this one.
Our,
Exactly.
Yeah.
and then clear change of state
Yep.
created.
Change state right here.
That's it.
Because there
Okay.
is no more liquidity, Alex, up to be collected money, because it's swept. So it's kind of should be logical to now go sweep all the way down,
Yeah, targeting these
But
lows, right? All these
This
built
one,
up
because there is a low build up on a bearish side.
exactly.
Yeah.
Because
And
what?
if you guys look to re-enter, let's say we entered on that sweep and we targeted previous daily high or whatever, you would wait all the way. Once you did a successful trade, you would wait the sweep of the low liquidity and then catch it up. In this case, right?
Uh,
That would
in this case, I will personally look to sell downward.
Sell off of that
Yeah,
sweep.
yeah, because notice, like right now,
Okay.
we're creating a swing off the hourly
Ah,
gap here. You see this?
yes. Yeah.
So I would be more inclined to sell down to these lows. You know what I mean? Because it's like creating a swing, right? It's off a
We're
fair
still
value
in
gap,
the bearish lane of the road.
and not only that, like we have more liquidity to target. Like all these
Yeah.
are still low resistance
Mhm.
too, right? Like all
And
these are
the
still
line
low resistance.
and that lower line that you created there, you would wait for the liquidity to be swept and continue down to enter. That one that
Yeah,
you
yeah.
Well,
It's possible, that we
well,
sweep these lows, but
this is a 4 hour chart. Like each candle is 4 hours. You have opportunities like inside those candles to enter.
okay,
yeah,
understood.
look, like we're creating, you know, this fair value gap. So it's possible, right, that we just like
Mm,
create a swing right
right,
here
right. It would be
and
the
then just
fair.
dump
Right,
further,
right, right. That would
you know?
make much sense. Yep, yep, yep. That's why you need full mark chart to know
Yeah,
where
because
where it.
look what happened here too. Like we were just building liquidity, right here, and then we swept
Mhm.
it. Now we're sweeping these liquidity, but like, on a daily time frame, we do have this daily order block, right? Oops.
Or the block. Yeah, there.
So
The
we can
beautiful.
possibly tap into this, create a swing off the daily, and start going back up to the highs. And so
Right. So it
we,
should be if it's fair value gap tapped from the bottom, we will continue down. But in case that rejects off of the order block, we can look for the buy.
yeah,
Is that what?
exactly.
Okay. All right.
So that's why having multiple time frame analysis is very very important because you can anticipate, okay, like how far we can retrace down to, and um where we can reject off of, right?
Right.
um
Yeah, the market
so yeah,
it moves in waves. If you've noticed, like it moves up, down, up, down, up, down towards the target. So you can always have like opportunities to find a position to enter if you have the longer term trend, and your longer term trend is what's most important. Like your higher time
Mhm.
frames, weekly, daily, you know, monthly, weekly, daily. Those are your most important time frames.
Okay.
Those are your key levels. That's where your key levels are. That's where you're gonna see reactions.
Right. Okay. Yeah, I tried to make a decision without seeing where the fair value gap and order block
Yeah,
is, and
it's very hard. Like it's hard to see a chart like on the 5 minute and be like, I know exactly what's happening.
yeah,
It makes you need
yeah,
context. You need the bigger context.
yeah. As soon as you said, "Look at this fair value gap, look at this order block," I was like, "Ah, okay." Then now I can anticipate.
Yeah, exactly. Because you
Yeah,
have the elements and you know where you're going. You know where you are. You're in a bearish trend, right? It's going down. So if it's going down, the fair value gap should be respected. The bearish ones should be respected. You know,
yeah,
the liquidity at the highs should be swept to continue down, and the order blocks,
right,
the bearish, should be respected. If we start to disrespect the fair value gaps, if we start to disrespect those bearish PD arrays, those like bearish signatures, then you know that we're starting to shift to the upside.
hmm
Because the
hmm
moment we
hmm
start to disrespect the order blocks on the bearish side, then we start creating change of states to the upside. And if we start creating
yeah,
change of states to the upside, then we're shifting directions.
right. And then you would wait for the market to create new fair value gaps and order blocks,
Yep.
so we can anticipate where up
Yep.
is gonna
Exactly.
go.
Exactly.
Okay, understood. Okay. I think it's gonna be, where I see myself really understanding once we open a chart and we go over,
Make
okay,
much more
this is
sense. Yeah.
Yeah,
how
for
you
sure.
set up your day. You start here, you mark this, once I have the setup in front of me, I think
It's easier. Like, this is the harder part. The theory part is the harder part. When you have the charts in front of
Yeah.
you, it's much easier. You have a visual. You can, you can think. You know.
Yeah, you just the other day when we marked up the chart, I was even me 2 days in, I knew where it's gonna go because I had all the technicals
Yeah.
marked up. So it was exactly what you say. Once I know how to mark it up, then it's easy to follow the price and anticipate.
Yeah.
I see what you're saying.
Yeah,
Yeah,
yeah. Then you follow the steps. It's very mechanical.
yeah,
Like,
yeah.
especially the way we trade is super mechanical. It's like, if you don't see what you want to see, then you don't trade. You know.
That's it. Yeah, I I realize that. Yeah, great, great.
Like I said, I was finished trading for the month, but I saw what I wanted to see, and I was like, okay, well, let me take a position. You know what I mean?
Of course, of course. Yeah. Okay,
Yeah.
so these are all the order blocks that he's marking,
Yep.
and then that's liquidity there.
Yeah. That's a target. That becomes a target because you're on the buy side of the curve. You're on
Yeah, I don't know
bullish
why, but
trend.
I understand better when you do on the actual chart. It's kind of clearer than
Hmm.
when I
Yeah, but
look
you
at
have
it.
to go through theory to understand the language,
Yeah, exactly.
Yeah,
But
you said right. Sorry.
it'll get easier. Like, it's not difficult. Once we get through all the presentations and you have all the elements in front of you, then we'll refine it more in the charts.
Give it an order. I think once you give me the order of the things you do, it will be much easier.
Like,
Like,
I'm
okay,
sure you see all
I'm,
the order blocks here, right, on the bullish side.
yep, yep,
Like,
yeah,
it's
yeah,
so clear. All
clear, yeah,
it's all respected. All the fair value gaps, all the swings. You see the swings at the bottom. Like, it's very.
yeah, yeah. Dado, you see them?
Yes.
I
Hmm. Yeah, I
know
do.
you're trouble with that.
But
I think they're like fair value gap. Once you see them, you cannot unsee them.
yeah, yeah, exactly.
I mean, for me, liquidity the easiest part.
Yeah, and
See, I see where is money.
yeah,
That's very important though.
yeah. That's really
That's
important.
very very important.
It's actually really
I mean,
good.
but this I have to practice five value gaps and order blocks to create this. What you're doing at this point. I mean, it's obvious now when you're doing it, but to practice my eye to do it. I mean, I have time on a chart.
Yeah, but the most important is the liquidity, because if you
Yeah, it
know where
is.
the money is and where price is going to grab the money, then you have like, bro, you're like in a ship with a compass. You know what I mean? You know where you're going.
Mm-hmm.
I mean the last trade that you guys showed us went off of liquidity and did a beautiful move. So,
Yeah.
or if you only knew the liquidity and CISD, you could be trading that.
Oh,
I
yeah.
guess, right?
Yes. Yeah.
Right? You see,
100%.
so that's why I understand when you say that's most important because the good trades can be just determined with those two
Yeah.
to catch that one
So
direct.
I wanted to show you guys what inversion fair value gap is real quick.
Okay.
Mhm.
Mm-hmm.
Delete this. Oops. All right. So as you can see, this is a regular fair value gap, right? Like a bearish fair value gap. So
Yes.
we tapped into it here. So like everybody's selling off the fair value gap. Everybody.
Mhm.
And so people definitely could have made money, off the swing. I mean, let's see how many handles they could have caught.
That's a 4 hour. So.
Yeah, this is a 4 hour, so that's like almost 1,000 points that someone could
Oh,
have caught
shit.
here. But
1,000 ticks.
yeah, 1,000 ticks.
Wow.
But bro, once we swept the high and closed above,
Hmm.
notice how it's like struggling to close above. Notice how it's like we're like still respecting the fair value gap, but once this move happened,
Exchange
then
of delivery there, yeah.
Mhm.
exactly this we had a CSD to the upside exactly. But realistically, our CSD was down here.
It's there. Yeah. Yeah.
Yeah.
There we just continued up. So it wouldn't
Even
be.
sooner too. It's even sooner. It's even at that.
Oh yeah,
Uh,
this one, this one.
Yeah.
yeah.
Because that retracement
It
off
did the
the first
respect.
fair gap is
Yeah,
retesting it.
yeah.
It's retesting
Yeah,
that.
yeah, 100%. So this is an order block here, right? plus our CISD combo. Let me just delete this.
Right, that's an order block,
And
and then
so, yeah,
yeah,
exactly. Our CISD here, and
hmm
then our order block. And so once we were here, came back down, had a retracement. Now we're creating a swing off the order block plus CISD, and
hmm
we're having reaction to the upside now. And right here, as you can see, struggling to break. And then once we finally broke above this inversion fair value gap, inverted fair value gap, because they're buy zone. This
becomes a
becomes
buy.
our buy zone. Yeah.
What
Since the
determines that? A big bullish green, or what does why when does it become a buy?
When we
Again,
flip
it
it,
becomes a buy when we flip it. Once we close above the gray box here, this inversion
okay,
fair value gap.
okay.
Once we close above with this green candle,
You would wait for
uh,
the next one to come down and then buy to tap
exactly,
into. Understood.
exactly. So
From
notice
there,
how we tapped into it multiple times and it
beautiful,
started buying up.
beautiful. Yeah.
So like, notice how many entries you could have caught. One,
Right, right.
two, even three here, four. Like so many entries you could have caught
Yeah.
targeting the highs. Ultimately we're targeting this high, but I mean,
Right.
just from the range here, right? You look at like 1,000 handles.
Oh, Jesus, yeah. And we would look for the swings on the lower time frame, which are those wicks to enter,
even
right?
those swings, these you can play
These
off of those
swings,
swings. This is a
yeah,
4 hour.
You can see even on a 4 hour, you can see them, and
Yeah.
then you zoom it to double check it if there is more on a shorter time frame.
Yeah, exactly. Because those you're
Okay.
gonna have swings inside
yeah,
swings on
exactly.
the lower time frame.
Yeah.
Okay.
And if
Great.
you start seeing
Yeah.
swings inside the swings, and then inside those swings there's change of states, then you can find an entry. Like, you know what I mean? You can see that the direction is moving where you want to go.
Then we start swinging.
Yeah, then we start swinging.
Then we start swinging. Okay. Okay.
Yeah,
I
this is a good one.
the
Nice, I
inversion.
like this one.
The
Okay.
inversion,
That's
yeah.
the value gap. Okay. Now I understand what it is. Inversion fair
Yeah,
value.
it always
Okay.
happens because what's happening in theory is that when you're first coming down, you're on the sell side of the curve, and then the fair value gap is respecting it on the sell side of the curve. Once we flip it, we disrespect the sell side of the curve fair value gap, and it becomes inverted fair value gap.
I thought
Mhm.
we just forget about it. Uh-huh.
Yeah,
Okay. So
because
still we actually
yep,
okay.
because you see how it's like a U shape, yeah. It goes
Right.
from top to bottom and then back to up, right? It's like a U shape or a V shape. Well,
Yeah.
when we're going on the left side of the curve, when we're going down, it's bearish, and then we flip after the change of state, and now we're pushing bullish. Well, right when we flip that, when we disrespect the fair value gap that's supposed to be bearish, well, now it becomes a point of like support for the bullish side.
Un- Understood. Understood.
Yep. So
I was scared from the name. When you mentioned it the other
oh yeah,
time, I was like, Jesus, when they
inverted,
start
yeah.
to inverted. But okay, now it's clear.
Still there, Paul?
Yo, my bad. Talking to my grandma.
No
She's
worries.
in town. Uh, so, what were you saying, Adrian?
I was just explaining the sell side of the curve and buy side of the curve, like what it means to be an inversion, like how price came down, like the reason why it becomes an inversion is because there's the sell side of the delivery that we're pushing down, and we're respecting the bearish fair value gap, and then once we flip it, we're disrespecting it, essentially. So
Yeah.
we're on the buy side of the curve at that point. Like, we're not selling anymore. We're on the lane of like bullishness.
Yep.
Right?
So my favorite
100%.
analogy for this is the car. The car lane, the car thing that we just looked at. It's literally like there's two lanes. You're either buying or you're selling, right?
Can I uh, can I ask a question now?
Yes, sir.
From all this. So this big bearish blue black candle that everything starts with, where you create that one.
Yep.
let's say technically we have new situation on the last candle, black one, the last on the right side, the newest candle, the new all the way on the right, the newest candle, big black one,
The most recent one.
all the way. Oh, yeah, more recent one, all the way. Yeah. So let's say now in the futures, yeah, I'm
Yep.
predicting now just to see. So let's say we're gonna have again create this. If we tap with the next one, let's say they're gonna be swings there, yeah. And if we tap next one, like the green one that did above this black one, then we can expect the swing for a high to collect of the liquidity high there.
Yes.
Let's say the next few candle is gonna be it's gonna play there, and then it's gonna sweep the high liquidity of that one,
Uh-huh.
and then it's gonna actually keep up and collect the high.
Yeah.
You're talking about
Just
something like
technically,
this, right?
yes, and then it's gonna go a little bit, yes, and then it's gonna go up.
Yeah.
Okay,
that
yeah,
happens,
exactly. Exactly, yeah.
That's
This happens.
that becomes an inversion.
This
I-
becomes
Inversion. That is, it can copy the same thing what happened here with the
Yeah.
black one and a green one.
Yep.
There was change there.
Yeah, exactly.
yeah. We can do the same thing what we did here.
And then
Same thing here. Yeah.
yeah.
And for the other bearish, we would wait for the tap into that fair value gap from the bottom and then buy sell. In the same example on the far right.
Like right here, yeah. Yeah,
No,
exactly.
no, there. So we started going down. We created the fair value gap. Do we wait for the tap up into the fair value gap to get to buy sell? Yeah, that. If we
Yeah,
tap,
exactly.
okay, cool.
Yep,
Cool.
yep.
Yeah.
Exactly.
All right.
But look, we haven't confirmed CISD, right? Like if
Mm-hmm.
we were selling, I would want us to do this.
Yeah, to confirm
You
the
know what I mean? Create a
CISD.
swing and then
Ah,
confirm the CISD.
okay.
So when we open
look,
next,
look at the inversion from the other side too.
what, this one?
Yep. Because we have that inversion. If we had the CISD confirmed, then we would have the inversion and the fair value gap.
Yeah, because what Adrian's talking about is this, right? The bullish one in this scenario, like if we come close below this bullish fair value gap, this bullish fair value gap becomes a sell zone, right?
It's inversion.
So
yeah.
we can anticipate a
Tap
swing
and-
formation and then just dump.
Okay, understood. Yeah, that's what I was asking. Yeah. Okay.
So just keep in mind, you see that pattern right now. Like we have a big push up and then a big push down. It makes like a V-shaped pattern.
Yeah.
That V-shaped pattern, like where price is the most recent. See, Paul? Like where price is the most recent today.
Right here?
Yeah, that you see the V shape that we push up and then we push back down.
Yeah.
Yeah, so we push up and then we push back down, and that's where we are today right now. Well, keep in mind that pattern of the push up, push back down. Like keep that in mind because it'll be important later.
Okay. Okay. And now, yes, because it's inversion, as soon as we get the next bullish there that taps back into the fair value gap, we can anticipate to continue up. What Dado was asking.
Yep.
Okay. All right.
Paul, you're good.
We're getting a little deeper here.
Yeah, yeah, it's gonna get deeper. It's gonna get deeper, but not too deep. Like it's we're it's gonna be at first you're gonna feel a bit overwhelmed, but after you're gonna be like, oh, it's very simple. I understand what I'm looking at.
Yeah, because it's just like a lot of information at once. So
Exactly.
I feel exactly what you said, like a little overwhelmed because it's like now suddenly I tell you there is three, like if you don't know, whatever, three types of car, and I just
Yeah.
tell you fast, you can get overwhelmed by that, even though it's just three things
Yeah,
different. But
yeah.
now I
But
have to remember it.
it's like when you eat food, you have to eat and then you have to digest it. You know, like you're getting a lot, you're
Yeah,
consuming a lot of information, you have to digest it. This is why I say we have to take breaks in between classes, because you have to be able to digest it. Maybe throughout the day, you're going to think about it. You're going to have click moments, you know, just by thinking about it. Just in between days, when you're looking at charts, you might start connecting the dots even more. You know what I mean?
right, right. Well, now, for example, when I go back to mark my fair value gaps and everything, I'm gonna look, did the price, was that, did it respect the fair value gap,
Mm-hmm.
or we had a reversion? So I have an extra thing that I wanna see on the
Yeah.
chart now.
Well, this is what I mean, right? Like
Yeah,
to take
yeah,
days in between in order to digest what you're learning. Because if we go day after day after day after day, it's gonna go in one ear out the other.
yeah, yeah. I love that that a little homework. Like we
Mm-hmm.
do this, and then I the next day
And it
or
doesn't have
so.
to be complicated too. The homework, you could just go on the charts and just look at the candlesticks. You know what I mean? Just go click around, look at it, zoom in, zoom out, try and find the levels that we looked at together.
Right.
And
It would also be helpful maybe to give. I mean, if you think maybe to mark the highs and lows of month, week,
yeah,
and then see what is
yes,
happening.
yes,
Oh, okay,
yeah.
okay, okay. I'll do that.
Month,
Okay.
week, yeah, daily.
Yep.
Yeah, maybe we can do. Maybe we can mark one time on the end of this training
Yeah,
together. So
yeah, for sure.
great, great.
So we're gonna retouch on internal versus external liquidity. External liquidity is found at major market structure levels, so daily highs and lows, 4 hour highs and lows, weekly highs and lows.
Right.
Just anything outside the range, you are gonna consider external liquidity. And the
Right.
internal liquidity is liquidity within a market range or between two external liquidity points. Understanding these two types of liquidity points helps trader anticipate where the smart money is targeting liquidity before making their real move.
Oh, shit.
So internal liquidity refers to
Sorry.
no worries.
Yeah, my bad. Accidentally joined from my phone.
Oh,
So
no worries.
sorry.
Uh, so internal liquidity refers to liquidity inside a market range, not a major highs and lows, but within structure. So this includes fair value gaps, order blocks, trendline liquidity, previous session highs and lows, and intraday highs and lows. Um, how internal
Mm.
liquidity works is that it provides resting orders for price to balance before reaching external liquidity. So, do you remember when Adrian and I both said it's the IRL to ERL model, like internal to
Right.
external model?
Right.
So usually that's the case of a lot of good trades. We go from internal of the range to the external,
Which would
and
be from the fair value gap or order block up to
yeah,
the liquidity.
exactly,
Okay.
exactly, yeah, 100%. And so internal liquidity levels are used for trade entries before price moves towards external liquidity. But also, you can use internal liquidity as exit points as well. So it can work as both entries and exit points.
Internal. Can you repeat? Sorry, it was cutting.
So internal liquidity levels can be
Mhm.
used as both entries and exit points.
Ah, I got it. Got it. Got it. Got it. So we
Yeah,
can basically go from fair value gap to fair value gap.
exactly. Yeah, hundred
Understood.
million percent.
Okay.
We go
Cool.
from liquidity to liquidity, order block to order block.
Right.
You know,
Right. Right.
yeah. External liquidity refers to liquidity following extreme levels that an institution target. Typically on a higher time frame, right? So previous daily highs and lows, previous weekly highs and lows. You know, equal highs and lows on a daily or 4 hour, swing highs and lows. These are just external liquidity points that you're gonna see and target as your ultimate TP, right? Like, let's say you're swinging to the higher time frame target. Yeah, you're gonna be targeting your daily highs and lows, weekly highs and lows and stuff like that. But if you're trading like intraday, like let's say you have to close by, you're like trying to go in and out for the day, then you'll be targeting internal to internal realistically,
Okay.
because
Okay.
you don't know if it's gonna reach to the external, that day, right?
Right.
So you just take the low hanging fruit by taking from internal to internal. How external liquidity works: institutions engineer price action to seek external liquidity pools before reversing. Price usually runs to external liquidity before making a significant market shift. So, you know, um, same thing, right? Like what happened last Friday. We swept those weekly highs, and what
Yeah.
do? We just
When.
dumped.
Yep. Yep.
So those weekly highs, that was our external, liquidity target that that market
Right.
was trying to grab. And once you grab that, we just dumped.
Yeah. Right.
So
That's literally the chart from last week.
yeah, it is. So we had the build up liquidity, bunch of build up liquidity here, bunch of build up liquidity to the downside, right? And
Right.
so what do? We just had to sweep the high and target all the lows. So we just
Yep.
dumped.
So first TP would be the first red line, and then the
Yep.
we might let run to the second one as well.
Yep.
Okay.
Exactly. So this would be your external target lows, external lows. And then these would be your internal lows.
Internals. Yep. Understood.
Yep.
Just quickly, toilet break. One second.
Yep. Dado, you with us?
Nope.
Yo. So
How much?
nice. Are you still recording?
Yeah, of course.
All right. Sure.
All right. I'm back.
All right.
Awesome. So yeah, we have an example of internal versus external. So I just kind of made this so you
Mhm.
kind of have an understanding of
Right.
like
Right.
how it can, the general framework of how a day might look.
Right.
So
Technically, this is
previous day,
external to
yeah,
external as well. Like you have pretty
yeah,
much
it
like
is.
all three in here.
Yeah,
Yeah.
it has everything in here. Yeah.
Yeah. And how often are external to external? I would assume much less often, right?
Well, external to external usually it's the framework for reversals. So when we have a reversal, we have an external to external.
Yeah. So so in this case, entry number one here is internal to external, right?
Yes. On
Because
the.
we're within the two external ranges, right? We're we're within the previous daily high and previous daily low,
Mhm.
and then we're we're targeting the internal high of the range, and then what are we targeting? The external low.
External.
So entry
Ah.
number one here is internal to external. Make sense?
Right. Yep. Yeah. Yep. 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 Yep.
And then entry number two is your external to external, because we took external low and we're targeting external high.
Mm.
So entry number two is external to external. Entry number three is just a continuation, but we're
Of the internal
going
to
from internal of the range to the external high. So
external.
entry number three is internal to external.
And would
So
you would say that it's very risky just to let it run external to external? It would be
yeah, it's
much.
in a perfect scenario, you would
Right.
take the buy here and take it to this high and make fuck ton of money. But
That's what I'm saying. That's what I'm saying. Yeah. Yeah.
yeah,
It's
it's it's a very
and you still can if
you
you
still
follow
can,
the
yeah.
value gaps and order blocks on the
Yeah,
along the
exactly.
way, right?
Yep.
To re-enter.
Yeah, exactly. And if you have a, like let's say like we're like tapping into a daily fair value gap to the left and we're like creating the swing, then we're more than likely to, target the external highs because we're playing off the daily displacement, right? But if that's not the case, we just like sweep uh, previous daily low and we're still coming from a bearish trend, then it might not reach to the external high. It might just reach to the internal and just dump more.
This is exactly the same chart from Friday on NQ, except just inverted.
Opposite. Yep, yep.
Yeah,
That's what I wanted to
because
say. Yeah.
the external high and the external low would be the previous weekly high and previous weekly low.
Yeah, it's actually the opposite. Yeah, you're right.
Yeah, it's
And how would you decide? Okay, now I'm gonna have my highs and lows off of week, not off of day.
it just
Is it
depends on the
you are
context of how the price looks, how the chart looks.
okay? And also, let's say you have marked week and day, and you see clear swing from the daily high. That means okay, we are focused on the daily range, right?
Yes.
Okay, cool.
Yeah,
Understood.
exactly. If you see, like, let's say you look at the charts, right, and you look at the weekly chart, and you see on the weekly chart we're starting to create a swing on the weekly.
Okay,
So now you can frame your idea off the weekly candles.
weekly. Yes, understood.
If you see, like, let's say on the daily, you look at the chart on the daily and you see, oh, we just tapped into a key level over here and we're forming a swing on the daily. Well, now you can frame your idea off the daily.
All right, I just understood clearly the time frames now.
Yeah. Yeah.
Now I understand how you decide what to watch because I'm like, okay, we have all these highs and lows, but how do you decide which one?
Yeah,
Well, we
but you
wait
don't
for
have to
the
worry about that right now because we're gonna tell you how to decide later.
okay.
Like don't jump too far ahead. Just take it step by step because you don't want to overwhelm yourself either. You know what I mean?
To be honest with you, I don't know why, but when I get the bigger picture, I understand better for
Yeah.
whatever reason. I just
Okay.
connect the dots. So this actually, what you told me helped me understand all what we just spoke about.
Right. Yeah. Because
To be honest.
it's the same logic all the time. You
Yes.
decide which time frames you pick based
Yep.
off of
Yep. Yep.
how it looks. You know, how it's setting
Yep.
up.
Yep. Yep. I just understood a lot.
Yeah.
Thank, thank you. Thank you.
Oh, you're gonna keep understanding as we go. A lot.
Yeah.
There's more where that came from.
Yeah.
Yeah.
Dado, you still
And
there?
I'll
so
go back to I'll go back to what you said in one of those videos, referring to a book with words and how they're just words, and then you understand
Oh yeah,
when
yeah,
you read.
exactly.
Yeah. So this was just some lines on the
Yeah.
screen, but now
Now
it's
there's
like
meaning.
now there's like a beautiful song.
Yeah, exactly. So now that's what I like to say about the charts is that you're reading charts. You're not only looking at lines. You're reading
yeah,
what's
it's a
happening.
story.
It's a storyline. Yeah.
Yeah, yeah,
So
and that's feel like
what's the story of price telling you right now, you know? And just like a story when you're reading a book, there's continuity, right? Like the words have to create a sentence that makes sense. If there's random words next to each other, it doesn't there's no continuity, there's no it's not coherent, you know what I mean? The same thing with the charts, it has to be coherent. That's how you can anticipate the next move to happen because it'll continue the chain the same way as a sentence. You know how sometimes you're reading and you can kind of like guess the next word before you even see the
yeah,
next word? Well, it's the same thing with the charts. You can guess the next move as you're looking from left to right, like what's happening, you know? Just
yeah,
like a book.
yeah, yep, exactly. Yeah. And then if we don't understand and words don't match up, we don't trade in
Exactly.
a way.
Exactly. Yeah. Yeah, exactly.
Okay,
Just wait for a perfect confirmations.
yeah,
Yep.
Technically, the game.
yeah. If we see something like John walked in a room and started flying a plane, we don't trade.
Yeah, yeah.
It doesn't make any sense.
Yep.
Yeah, exactly.
That's it. That's it. All right.
Good one there, bro.
Yeah, I mean, just to prove that I understood.
If you
Yeah, yeah.
if you open a door outside and the pigs are flying, you don't trade.
Yeah, that's it. There's no trade today. Close
No,
the trap.
hey, no trade today.
Uh,
Whenever you guys are ready.
uh,
yeah. All
so
right.
yeah, this is just going over the entry points. So entry number one, midnight open by manipulating price higher, sweeping internal liquidity. Right. So midnight open, London, and then what do we do? Swept Asia high, swept the equal highs, right? The internal
Right,
liquidity.
right. London. Okay, we are looking at the second one. Okay.
Yeah, yeah. We're looking
Yeah.
at entry number one here.
Hmm.
So we swept the high, and then what happens? We have a bearish reaction.
Manipulation, like
Yeah, exactly. We manipulated the highs, and now we're trying to distribute down to where?
the external low.
Yep.
External lows, but the first target will be Asia low.
Asia, right, right. So to internal first. Yeah.
Yep. And then we're taking the
Right.
previous daily low. Oops. So price then had a reaction to sweeping the previous high, creating a bearish order block. So we create the
Right.
bearish order block, and then what do? We retraced into it and then tapped into the order block and then dumped. So
That's
the
formation.
ideal entry would have been here,
Yeah. Yeah.
the retest of the order block after this
Right.
initial reaction.
Right.
And entry number two, New York opened bullish after stripping external liquidity, previous daily low, and had our CIC to the upside while creating a bullish order block.
Bullish
Right.
order.
So we came down. New York opens. We sweep previous daily low, and then have a CIC to the upside. Notice how we close above
Above.
this line here. So we're
Yeah.
confirming CISD. So now, so this is this is a good example right here. So notice how we don't tap into the order block, but we still like break a structure to the upside.
Right.
Sometimes price will sweep the low and tap into displacement and then start pushing. So this is something you can expect from time to time. Like not all the time, you'll see it like picture perfect to where it's like hitting the order block and just start going up. No, it's gonna create liquidity, right? And
Mhm.
then have the initial reaction and then sweep liquidity, then go into the its intended direction. So
So we would wait for the tap in the order block.
yeah,
Bullish order.
exactly. We'll wait for
Okay.
the sweep of liquidity, tap into the order block, rejection, swing formation, and then enter. But let's say like entry number two is too risky for us. It's like, okay, it's like it feels like I'm catching a falling knife. Like I don't want to do that. Let me just wait for better CISD. So right here, after tap into order block, what do? Came up, broke structure, had a change in state of delivery to the upside, and then tapped into the fair value gap right here.
Okay.
So let's say entry number two was too risky. You can 100%, wait for entry number three here and just enter off the fair value gap because you know that prices manipulate the lows. We swept the previous daily low. We're creating a swing, rejecting off the order block. So now we can target where, the
The
London
first
high
two. Yeah.
and then external high, whatever the case may be.
Right. Right.
So
Internal.
yeah,
So internal to internal, and then internal to external.
yep, exactly. So price pushed higher from reaction of bullish order block. Price creates a fair value gap, giving continuation entry based of trend and volume, right? Because the trend is now bullish. Like we're making higher high, higher low, higher high, higher low, and the volume's kicking in because we swept previous daily low, and then it's New York.
Right. Right. New York has the biggest volume,
Yep.
so we expect the move to be good if
Yeah.
it's
100%.
okay. Okay. Asia import.
So sessions and kill zones. Asia is important to analyze as it can create the model for New York and London. Its purpose is to create liquidity above and below its session. Mark the top and bottom and top of the to create a range as well as a midline. Often, price will aim to take out a higher low or both, starting with London Open. If Asia
And
takes the form of, say again?
no, I'm writing down. So mark Asia highs and lows.
Well,
That will
yeah, we're gonna
start.
we're gonna put you on with an indicator that automatically does that for you, but
Oh, nice.
I still like to like to have it marked out sometimes, just to see it better. But yeah, the indicator does it for you, so you don't really have to worry too much about marking it out every day.
Okay, great.
If agent takes a form of liquidity and is impulsive, continuation trade can't be played. So, the general rule of thumb is that we wait for Asia highs and lows to be swept during London or New York. But let's say if Asia took a previous daily low or previous daily high or something, then we may not sweep Asia highs and lows. We may just like continue off that. And I'll show you a different example of
So
that.
basically, what we are waiting in London and New York might even happen already in Asia. Is that what?
Exactly.
Okay,
Exactly. Yeah.
okay, okay.
So Asia session is the first session which opens every new day and is the weakest. And what I mean by weakest is it usually creates a range. You know. But don't get me wrong. You can still trade Asia because sometimes Asia can create low and high of the day. So you can still trade Asia sometimes and still, make some money, but it's not, as recommended because we're waiting for Asia highs and lows to be swept, right?
Right.
Um, Asia builds up liquidity before more volume comes in. Sessions and kill zones. So Asia session price consolidates within a range, trapping retail traders. Liquidity builds up both sides, buy side and sell side. London, a false breakout occurs to grab liquidity. Stop punts at the highs and lows, and then smart money induces traders into the wrong direction.
Mhm.
Uh, New York, after
Wo-
taking liquidity, price moves into intended direction. CIC confirms a real move. So, you know, usually New York will either play off the CIST that London created, or it'll create CIST during New York uh, to reverse. And
So what you're saying is, if London already created a change in state of delivery, we can expect New York just to continue.
yeah, exactly.
Okay, all right.
The timing is a little bit off, so I'm not gonna let you like. Actually gonna change that, but
Yeah, just
uh,
disregard the timing for now. We're
yeah,
gonna show you the timing. So
Okay.
go back one slide real quick. I'm just gonna add something. One more, like where there was that chart with the no, not that one. Go back forward. My bad. Yeah, that one. Okay, so typically Asia does accumulation, London does the manipulation, and creates the high and low of the day. New York does two things. New York could do the continuation of the move that London made, or it could do the reversal. And if it does the reversal, the targets become the Asia high and low, like for low hanging fruit. You get what I mean?
yeah, I know. Yeah, exactly.
So, and then if we continue, we would target the daily high and lows.
If we
If
continue
we
where?
continue
If New York
in
is the
New York,
continuation,
continue of the London, yes.
we
Which high and low we
we would just
target?
continue downside, because if London made the high of, like, let's say for this example, London makes the high of the day, we expect
Okay.
New York to be a continuation. Well, that means that New York will continue down away from London.
But which high, which then low we are focused on?
Well, it would be a higher time frame context of like maybe there's a previous daily low.
Okay, we go back. Okay,
It,
okay, got it.
it's
Sorry.
just
Yeah.
to explain like
Yes.
the characteristic of of New York, like what it does. So New York does two things. It could either do a continuation in the direction where London left the high or low of the day, or it can do a reversal. And like there's specific things that price does before it creates a reversal. Like one of the things it does is like in that one example where it opens the day 1800 and then London and Asia, all it does is just like opens low, right? Opens and creates a low, and then New York does a reversal, and then we come up. It'll be easier when I show you on the charts, but like we did that a few times this week where during the day we were in a bullish trend. Asia, London opened, made a low, and then New York had a reversal and just expanded up. And the targets were Asia highs and London highs that were created in the morning, like pre-market open. But all this just to say that New York does two things, you know, it continues, it does the continuation move, or it does the reversal move.
Okay.
Yeah. So can you see this big candle here to the right?
Yeah.
So this is how candle gets created, right? You don't even consider this as just price. Don't even consider this session.
Okay.
Don't even consider this Asia, London, or New York. So this is just price. So price may consolidate here, creates a wick, and then the body off the open,
Mhm.
and then creates the bottom of the wick, and then close right here. And that's how the candle gets created. But this logic goes for every time frame, right? So this could be 5, and this could be 1 hour, or this could be hourly, this could be daily, right? So you get how the candlestick works, right?
Yeah, I watched the
Yeah.
video. Open high, low, close. Open high, low,
Yeah.
close.
Yep.
The song.
So yeah, man. So that's pretty much the gist of the Asia suit model. And I have different daily profiles where you can kind of tell difference on how each and every day could play out. And
So
you know
you understand how this schematic is showing you, like, let's say for example that big candle to the right, that's a daily candle, okay?
Right.
And then everything on the left, that's what's happening inside that candle for
Yeah, that's
yeah
that's
yeah.
clear.
And every candlestick has its own like range of what's happening inside it, and it all has the same logic, just like Paul mentioned.
yeah, 100%.
So there's
Right.
always going to be a low, there's always going to be an open of the candle. If, let's say for example, we're bullish and we make a low, well, obviously logically, in order for the candle to create the bullish candle, we have to
Go high.
cross the open and go high, yeah, and create the body.
So we can actually trade off of the candle.
Yeah, well, you're gonna use that candle part of your logic. Yeah, you're gonna look at the higher time frame candle and be like, okay, well, we have to create the body now, so we have to expand up.
Right.
So
right,
that
right,
gives you
right.
confidence for the continuation for New York.
Right. Extra confirmation.
Yep.
Okay. Okay.
So this is different daily cycle examples. So the first example is like usually what we aim for, right? Asia consolidation, London manipulation low, and then New York reversal or New York continuation, off London. But sometimes you can see Asia expand, and then London consolidate, and then New York continuation from Asia.
It pretty much does it, yeah, like a reversal
Yeah,
continuation
pretty much
upside.
like a reversal. Mhm. Sometimes you can see Asia consolidation, London manipulate both sides, and then New York
Mm,
reversal.
that would
And
be like
then
it swept on the liquidity from external, and we can target internal in New York
Mm-hmm.
yeah,
on
mm-hmm,
the third example. Okay.
yeah, 100%.
Yeah, that's good. Yeah, good way of looking at it.
Asia
Okay.
consolidation, London manipulation slash expansion, and then New York consolidation. Sometimes, if London has a big move,
Mhm.
New York might just chill out, you know. And so,
Right.
just
Yes.
These are the most likely to happen. If we see these two on the left, we can anticipate the third one. Like
I
this is
mean,
most likely, or
I'm
what?
just giving you different ideas of how
Yeah, they're not set
each
in stone.
session. These are
Ah,
not set
okay.
in stone. These are just like my examples that I just randomly thought about. You know what I'm saying? Because I've seen these type of things happen all the time, and so
Okay.
you know,
All right.
like not every day is gonna be like this, bro. But you're just trying to see, the general idea is this, right? The first one, Asia consolidation, London manipulation, New York distribution. Like that's the general idea, but you know,
Different
some
variations.
different there's different variations of that. Consolidation, accumulation, distribution, like there's different variations of that. I'm just showing you like the different versions, right?
Mhm.
So this is a example of bullish order flow. So breakup structure is the same thing as CIST. So
Real
we gotta
quick,
change the state.
time
That's
out real
what I
quick.
didn't.
How
Yeah.
much? How much? How much information do you want to consume, like right now,
Oh
Alex?
yeah,
Yeah. I was about to say I think I capped for today.
Yeah, because it's a lot of
yeah, yeah.
Because
info.
yeah. If we start now on the another one, I might not understand these
Yeah, we don't want
clearly.
to
Oh,
overwhelm you either.
Yeah, yeah,
Be
yeah.
too much information for
yes,
one time.
yes. And this is great because in previous class I clearly understood fair value gap and order block. Today I clearly understood the
Liquidity.
liquidity, and a little bit of practice on this would be good.
Hmm.
So let me see what I wrote. Well, yeah,
Or
because
question.
earlier
What's Alex?
earlier when you were showing the charts, I saw you saying broke the structure, and I kept myself from asking because it looked like another thing to talk about. So
Hmm.
that's why now that you came to it, I'm like, oh, okay, now we're gonna talk about it. So we can call it a day
Hmm.
before we go there, I
Sounds good,
guess.
man. I hope everything made sense to you. So far. And
Yeah, to be honest,
awesome,
yeah,
awesome.
it really did.
Uh,
At least how everything moves, and then the liquidity, how it's being built. But to
Hmm.
be honest, I'm gonna probably need to look at those liquidity you show me, like double tap, triple tap, while I'm watching charts, just to kind of,
Yeah,
while I'm
practice your
practicing,
eyes.
remind myself.
Yeah,
Yes,
You
yeah,
should,
100%.
like
yeah,
right
yeah.
now, like what you should do in order to get a head start is like take a time window during the day, like an hour, 2 hours, whatever, and just look at candlesticks like forming. You know what I mean? Like go on like the daily, look at the daily candle where we are. Okay, now go inside the daily candle. Okay, 4 hour inside that daily candle. You know what I mean? And see how the candles move. Okay, go on deeper inside in the hourly of that day, and then look at how the candles move. You know what I mean? Get familiar with the environment, and that's already gonna like put you
Right.
ahead just by looking at how the candlesticks move and maybe generating some ideas of what do you think is gonna happen. Does that make sense?
Right. Um, yeah. I mean, when I sent you the last chart
Mm-hmm.
to check it, I then saw clearly price respecting order block, price rejecting off of fair value gap. So
Mm-hmm.
all the movement of the price was I understood why
Yeah.
it's happening, what happened on the chart. So it's very important for me to mark out everything, and then I follow. Okay, I see this respected, and now I even know about the inversion.
Mm-hmm.
I'm gonna pay attention about okay,
Yeah.
here we inverted. And so or okay, but then if I put last week, I can clearly see the highs and lows, and I just mark them. Right? Can you just do it once? Because for me, it would just be easier. Just like open a chart. Yeah, just go back randomly. What I would do, we'll just push it back, uh, and yeah, just like go back few days, and then tell me, okay,
Sure,
okay, let's say there, and I want to practice.
I'm gonna hide it. Go to a random spot. Okay, so now I'm in a random spot. I don't even know where we are. Okay, this is the weekly chart right
And
now.
that's like, okay, great. So how would you practice? Have me back testing because
Okay.
I want to know where the highs and lows are.
Yeah, so right now, like this is the high. This is the previous weekly high. Previous weekly high over here. This is a previous weekly low over here. Previous weekly low.
May I ask a question? Why is not based on the last candle?
Oh, my bad. You're right. I was looking away from my chart. Like, yeah, okay, previous weekly low, previous weekly high over here. Right?
And what about that last one?
Which one? This one?
The small one? No, in front of that one. In front
But
of
that
the
week
one you
still
marked.
going.
There's a big.
That week still going. So
Right.
Aha.
'Cause
Okay. Okay.
I mean, it's not
Understood.
closed yet. I
Yeah.
mean, if you look the previous week and now you are in this week, you are
Yeah.
not. It's not closed candle. You know.
Yeah. So if you're in this week, yeah, exactly. So if you come down, right, and you're like,
Understood.
this is Monday, so this is like the weekly open over here, right? Now we can see that okay, we came inside this fair value gap,
Mm,
right? And now we're on the daily chart, we're creating a swing over here, you know? So what can we notice, right, on the daily? Now, if we come down to the hourly, we should see a change of state here.
right. They start going up.
Yeah.
Yeah.
So you see over here, this would be the change of state. Right here.
Mm-hmm. Right. There is an order block there.
Yeah.
Sweep.
So then price
Low.
price continued to come up, you know? Like, let's see where it goes. I don't even know where we're gonna go. If we're gonna keep going up or go down. Yeah, okay, so we're continuing back up. Like, obviously now we can kind of see how in this instance we have the sell side of the curve, it changed the state, and now we're pushing buy side of the curve. So we want to see external over here, the previous weekly high, you know? So if we look at the like candlesticks over here, let me write only the weekly, because that's what we're looking at, right? So we have the weekly here. So you see because this is a new week, so we opened up a new week here. Okay, so you know what I'm gonna do, I'm gonna put 2 candlesticks here. So we have the previous weekly open here, right? And now this would be, because we opened a new week here, so this is Monday. I didn't realize this is Monday over here that we opened. So the new previous weekly high would be here. Previous weekly high. And then the previous weekly low would be here, the new one. Previous weekly low. Well, based off of like how the price is like forming its structure, I would be aiming for the highs. Like for these highs here.
Right. Okay, so if I was back testing, I can do the same thing and then see what happened
Yeah, exactly.
on the
Yeah. So
okay, good.
it's just looking at charts, like looking at what's happening on the higher time frame, and then zooming in, and then continue up. Like, I hope we come back up. We retested that here. We retested the change of state here,
Okay.
and then we tapped into the previous weekly high.
Yeah.
And we
Right.
and we continue. We barely look how barely we like tapped into that. Like it's just building liquidity, and now we finally tapped into it. You know,
It should go.
Right.
see what I mean? So like this could happen too, as well. Like where we almost tap into it, and then price moves back because why? Why are we moving back? Because we want to build more liquidity before we come
More
back
money.
up again. Yeah, we wanted to build more money up. So
Okay.
so
All
basically,
right, good. I'm gonna start adding those two
yeah.
on my back test.
So like
Can
for
you keep going with that slide forward? I just want to see what's happening a week after, just to see if my brain. Yeah, there you go. Okay. Okay.
makes sense, right? Yeah, because we're still on the bullish side, right? Because over here, over here we came into
And
a
there's-
higher time frame fair value gap here. So
Yeah.
we just respected that. So this was internal over here. This was internal. Oh, my bad. Sorry. Charts. This was internal, and this is up here was external.
Mhm.
So so we went from internal to external. That's the framework.
Right. Right. That's what when we swept those lows there, we went all the way up.
Now that we're external, we're coming back to internal.
Yeah. Now. Yeah.
Back to that. Okay. And then when we from that top all the way up, that was the liquidity, or just a change of state all the way up,
This one?
all the way up there. Yeah. What determined a change of state in the
And
liquidity?
there was swept of the previous high over there, so I was like really external broke there.
Go to 4 hour, Adrian.
Yep.
See that's 4 hour sweep. Alex.
Sorry,
See the 4 hour sweep that Adrian marked out over there, up there.
on the top.
Yep.
And but that's my question, because that's way over the weekly high. So what did we sweep there?
Liquidity here.
We swept the high, weekly high.
So that's still considered the weekly high.
Yeah, because look, we're starting to change lanes here.
Yeah.
We're creating a swing.
Yep.
So now
And the
notice
line,
right below that, Adrian, right before that, can you draw the liquidity? Like the little equal highs there.
this.
Yeah. So notice how we swept that high, Alex?
right?
It's
But
equal
how?
highs.
But how
all
far?
this, all these cards, what you're seeing, so now it's like 2 weeks.
Yeah,
Like all these
this is like
candles,
2
what you
weeks.
see, that's like 2 weeks.
Here, look, I'll show you how long. This is from this low. So from this low all the way to this high, this is exactly 2 weeks.
Right. But my question is, when we had this previous week high line that you put,
Yeah.
how far from the, because it looks to me like we went a lot high over it to call it, oh, we swept the previous week
But
high.
let's look at the context here.
That's what I was asking. So
Yeah.
that's what we.
It's always
Okay.
bigger picture, so.
There's always bigger picture.
That's because
It's always
okay,
bigger picture.
yes, we swept, but
We have monthly
okay,
highs.
Yeah, these
that's my question. So we went to the monthly high, picked up liquidity, and
But
we
you
went.
do day trading.
Okay.
yeah.
That's why when you just kept saying, but we swept the high. Okay, I see, but we went over the weekly high. So why the price now changed again when we went over and then we go to monthly? Okay, that was my question. Great.
Yeah, because we're gonna keep. We don't know how far it's gonna go, but once the signature that we can see is we grab liquidity, because this is still part of this high that got grabbed. It's just that both of these are together.
The monthly high, weekly high, correlates.
Yeah.
Right.
So
Yeah, but now,
so
as
this
soon
is
as I-
all together, you know.
Yeah, as soon as I saw the high, that was exactly my question, because I know that the price wouldn't just do that without any other context, based on only weekly context. So it made perfect sense that it's gonna sweep now liquidity from monthly if it's gonna change into
And notice
delivery.
how the reaction we had and the formation we had after the sweep of a high. We
It's
swept.
beautiful. It's beautiful. It's beautiful. Beautiful because that would be very, I would even with this knowledge that I have understood. Okay, great. We swept the high of the monthly. We have changed in state of delivery, and that would be our interest for bearish.
Yeah, because I was gonna say, I lost my train of thought.
Yeah, we talked a lot, man. It's 2 hours.
2 hours already, guys.
Yeah.
It's
All right, guys. Yeah. Thank you so much. I'll sit on this
Listen,
tonight.
before we close, I have one question. Can we
Mhm.
go on a chart that's happening right now, the now like real time?
I don't want to trade already.
I just no 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 I don't want to trade. I just want to one question.
Yeah.
Like it's just to give opinion. Like we're gonna talk about it. Like considering on a daily candles on 4 hours candles, daily candles, we are about to make a swing point. Yeah,
On this is already a swing point.
yeah, but down.
Oh, to the downside.
Yeah.
This is I wouldn't consider this a swing point yet.
No, like I don't think my charts are maybe up to the date. Maybe that.
Which chart are you using?
I mean, Q1.
Oh, you mean the four? This is the 4 hour. The 4 hour we maybe like,
Yeah.
but this is not even a swing point
Yeah,
yet.
yeah, yeah.
This is not a swing point yet.
Yeah.
We need more confirmation for swing points. This is not a swing
I'm a
point yet.
bit more on the
Okay.
bearish side, also, just because like, if we come back up to that fair value gap in the 4 hour, create a swing, we may go lower.
Mm-hmm. Yeah,
Okay.
because we're
Okay.
like right now. This is what we did. We went like this. Buy side of the curve, sweep of the high. Now we're on the sell side of the curve. Well, if we're on the sell side, I want to see the fair value gaps be respected.
Right.
Mhm.
Right.
Mhm.
And this is an order block too. Look
Okay.
at this. Look at this order block here.
Yeah.
I believe we had a daily CISD also to the downside, so it's just like confirmation that we may go a little bit lower.
Mhm.
Pushing back up.
Yeah, we did, huh? Because well, technically,
Yeah.
this is the change of state too. I mean, all of this
Yeah.
here. So this is
Oh, where this is in Q1. I'm on MNQ1.
it's okay, same thing.
It's the same thing. Okay,
Yeah.
okay, just to double check. Okay, okay, okay.
You're
got it,
just
got
on
it.
you're on the micro chart. I'm on the mini chart.
You know what's crazy? That I understand to read somewhat to read the chart, and I don't know how to use a trading view yet.
It's okay. It'll be
That's
easy
okay.
to learn.
That's okay. Last step.
But yeah,
Okay.
last step. But this
I
is the
don't know
most
why.
important is reading it like properly.
Yeah.
You know what? Like, like, and I don't know why, but I felt like we started from the end. Like I first understood why and how the
Because
branches
that's your
before
brain
I
starting like that.
Well, you know what? Because we technically did in a
right?
certain way because you're supposed to understand the narrative first before you jump into it. Like we gave you the foundation before
Yeah.
just showing you little branches. Like we're showing you
Yeah.
the roots first.
Yeah.
Yeah, I
Exactly.
feel like that. I feel like
Yeah, yeah.
we went
I
from
like
the
it.
it's great. And now we get into details, but it's crazy that I understand where the money moves, why the money moves,
Yep.
and
Yeah.
it's amazing.
Bro, just to tell you something,
Okay.
okay? Anyone else would teach you the opposite way. They'd show you the branches and you would be totally lost.
That's so
What?
true, bro. I've been stuck like that for the longest time, just
That's
learning
right.
the opposite.
That's really true because now whatever you teach me next, it's still respecting
The foundation.
the fund. Yeah, everything is based off.
It's
of this,
everything
so-
built up from the ground up. So you have a foundation. No matter what goes on top, like you understand from the base. The bigger the
Exactly.
foundation, right, the stronger you are.
Yeah, I think you put it in perfect wording. What I was just trying to say.
The
Yeah,
the
exactly.
the strongest shape in the universe, you know what it is?
That's
Triangle.
triangle.
Yeah.
Ah, right.
Yeah,
Right.
it's the strongest shape in the universe.
Right.
We're
I don't know
showing.
if you ever watched the stars in a very dark night.
Mhm.
Every single one it's in a triangle.
Yeah.
Every single position of the stars, they're making a triangle. So
Yeah.
I seen that, bro. Like Polaris or
yeah.
something. It like makes a
Uh-huh.
perfect
Yeah.
triangle, right?
Yeah.
Yeah. Yeah.
Great, guys. Great. Thank you so much. If there is a video of it, please share. And
Also, Dado, real quick, you should
Mm-hmm.
watch that
Mm-hmm. Yes.
video of types of swings. That video, the types of swings video I posted.
Types of things.
Yeah,
Okay.
you should watch that because it'll explain to you the different types of
The
swings.
question that I asked.
Yeah, the question that you asked exactly.
I'll watch it again. I just watched it once, and to be honest, it faded a
Yeah,
little
you
bit.
should
I
watch it
under-
again now with the refresher, like with everything here. But yeah, guys,
Yeah.
I'm gonna close the recording.
Alright.
Okay.